What's going on, everybody? Chris here. We're going to go over the Covey portfolio performance. Oh, did I highlight? There we go. So, still in first place. We was expecting a higher amount of subtraction of performance, but it's looking good. It's looking good, and we'll get into the reasons why for the portfolio. So the portfolio is mostly short. It's long volatility. It's short 2x bear oil, 3x bear short on the S&P 500, 2x bear short real estate, which is the one that's really helping us right now because the volatility's been going sideways on the VIX. Oil has been working against us. S&P 500 has been working against us today a little bit, not a lot, but a little bit. Real estate's been helping us, the short on real estate, 2x short, and the crypto's been working against us. So the one that's really helping us is the real estate and just keeping the portfolio balanced to where we're not incurring a lot of loss. And we're going to try and figure out, what do we do with the crypto? Do we dump it? I mean, it's the one thing that Jim Cramer was bearish on. So that kind of has me on edge just to like figuring out, okay, do I hold on to crypto shorts or do I get rid of them? Let's stop all that. Oh, okay. So gold is graded on the day. So it's cool. So we're gonna look at all that. let's go ahead and get rid of some of this. All right, and let's move this back to the S&P 500. And then I guess on a separate video we'll do macro. So on videos to come, macro, we'll do one on macro outlook. I mean, we kind of get some of that with looking at the VIX, these three main currencies, and then the credit spreads. But this is like a really slimmed down version. So yeah, we're not doing too bad on the. I mean, we could be changing positions today. Let's see how much Mark lost. You know, we lost 4%. How much did Mark lose? He got 1%. So the rankings might change. I mean, we just closed on the day. I wouldn't be surprised if I lost first place, just because crypto really rallied against me. And let's see, he's only got he didn't cut his crypto shorts, so I think that helps us in some way. Yeah, let's go ahead and jump in. You'd think that he'd be down a lot more. Wonder what's really helping him. Is it I don't know. Maybe it's that dollar and the real estate. Ninja portfolio performance. As far as today, we're gonna go ahead and take a look. $300 short on the day, so another 4%. I started to kind of ponder a little bit. Just, is there a way other than kind of things that are my rules that I can decrease my risk, like my position per trade, instead of doing 4 contracts at one time for split position, one position for a scalp, one position for like a swing. Maybe if the conditions meet a certain criteria, just do one micro with a wide stop loss and a very slow break even. Like, I think there is a certain time and place for a one micro, wide stop loss, a slow break even. And I think that's something I haven't been utilizing, because I've noticed when I trade, a lot of my stuff, it's really meant for like really slick entries, like a clean, steady market, and at the same time, like clean and high quality price action, and like for the most part, like steady. Like, it's not super like high ATR, high volatility range. So I'm thinking because was looking at the Apex group, and there's a guy who did 1 micro, and he made $167 on it, and he made it a swing, and I'm like, well, I mean, if he can do it, I can do it. Like, there's no reason why I'm not above trading the tiniest contract size ever. I don't know, a 1 micro, but it makes me kind of wonder, like, just how much can you really get from 1 micro? Like, I don't know. It just seems like really not exciting to do micros. The smallest thing. But I think when it comes to the volatile days where my trades aren't sticking, it hits break even, or I just start getting trades that end up being losers, like, maybe it makes more sense to just have something that's got a wider stop loss and a slower break even, just because of a volatile market, and just a really good setup, a really good entry. Because, like, for example, like, I was long on the day with the, oh my gosh, this now decides, like, it was just up a minute ago. Oh shoot. Like, I was long the S&P 500, and I was wondering, like, hey, so how far are we gonna go up here, you know? And I don't know, we didn't end up going that far up, and it was a little disappointing, like, on the close of the day. Like, this is the close of the day, and we barely even tapped that weekly open. We didn't even get close to it, and it's actually really disappointing. Um, you know, it's almost like we're getting stopped by this H4 breaker. So, I don't know. I'm thinking the conditions for that, for determining to do the difference between the normal position sizing for contracts versus one, I think we would have to do whenever. So let's, like, review the day. Let's see, this is the right one. So the day had it to where the hourly band separated from the pink, and also the 5-minute band separated from both pink and green. So I'm thinking, and then there would be times where it would be touching the green, but the hourly would be touching the pink. So I'm thinking, or like, I don't know. I think this is the beginning, London Open, and I think, oh wow, it came all the way back to retest big time here. I'm thinking that whenever there's a divergence, or only one of them is touching, or, for example, we're going outside, like, above and below these moving average channels, especially in the, I guess, the hourly in some way, or just huge wicks. I don't know. I have to figure out something, but for the most part, I think the way I've measured the chop and the volatility is from the separation and just the gray band just floating in the middle. And when they start both floating in the middle, it just gets kind of really weird. And I think that really calls for something where, you know, you just go low and slow. You know, big, wide, small size, like the smallest you can go, wide stop loss, slow break even. I think that's just the way I gotta do it, and enough for one, like maybe 0.5% or 1%. But I'm thinking that's the way to go. So Ninja portfolio performance summary: 4% loss in the day. It's fine. Like, I mean, the ultimate goal is to get it down to 1.5% per day, and it was 350 yesterday. Now it's 300. So I'm like getting it closer to where it should be, and there's more rules that I was able to follow. Like for instance, like just by happenstance, we traded within the right trend days, and I was super tired, so I went to bed early, and I stayed within the trade the trend times was just like 10:30. I went to bed at like I think 9:30, maybe 10. I was just too tired. And and then we follow the minimum risk to reward. Um, we made sure we were trading away from the. Oh no, we were trading into the pullback zone. We were waiting for alerts, and then um, we were trading more than or at 2-to-1 risk to reward ratio. We had a long swing and a scalp that's 2-to-1, and then but we did risk more than 1% per trade, especially getting to the later part of the day, just to try to make up or try to catch the trend or whatever, and it just kept on stopping me out. Like especially that huge pump. Before that huge pump, I could not have anything stick. Like this thing right here, I just had the hardest time. Like I was trying to get in here, here, and here, and I just got tired. I just couldn't do it anymore, and so I stopped trying to get in down here, and then boom, it takes off, and then a nice retest here, but I don't know. I was just tired of it, and I think I was getting ready for some kind of buy down here, but I think by the time we got to here or something, I went to bed, and then another crazy volatile whiplash, and then we're just chopping. We're chopping pretty hard into here, and it looks pretty bad. And I think, I don't know, this might be a hypothesis, but going in, if we were to have that 20% downside, I don't think it's gonna. I don't think because it's getting it's more towards the end of the year. If we were to get it this month, that it would be too hard to catch, and that you would need to go small size, wide stop loss, just because of the terrible liquidity, and just the smooth price action. I don't think that's going to exist for whenever it does decide to go down. So that's a little bit of a theory of mine. So that's kind of what's got me thinking of maybe putting that into practice as far as like something that can get me in that's like the smallest size, and then just let it run, right? All right, daily closing thoughts. Man, it lags a little bit here. Oh, S&P 500. Oh. So we'll start with let's get rid of this. Oop. We want this. S&P 500 on the week. We're doing okay. I mean, we bounced off that support line in the moving average channel. We came close to weekly support, and then we bounced off of daily support on a reclaim, and we're into an H4 breaker. We closed the day underneath the weekly open, and we didn't get very far. I thought that was interesting. I mean, we could take this away, but yeah, we didn't get very far, and it looks very weak. That's what I would say. Looking at it from a market structure point of view, we came in, retested into the breaker, so we broke on this candle to the downside. We kind of retested and went down, and then we made a swing failure pattern on a small time frame, and then now we're up here and we're close to the weekly open, and we're gonna see if and we're near the previous week low. So this could be a deviation forming, or we could head up towards 8-hour, 4-hour resistance, which is 38.59, and maybe tap this previous day high for a nice stop hunt. to purchase some liquidity, squeeze out some bears. But we don't know. We have to wait until things kind of break down. And looking at the momentum on the MACD, we look on the 4-hour. We did break an H4 to the upside. We saw that on TradingView, and then also here. But yeah, how long is that going to last? Like, is that going to actually hold? And we look at the MACD here. If we were to cross down on the H4 and the H1, it looks like that's possible, and it could be bad news. And then also, we've already crossed down on the weekly. And then if we look at the daily, it's so far away. I don't know. It's got to go sideways in order for it to really cross up on the daily. But this weekly MACD cross is going to bring a lot of hell and havoc. You know, if we look at like other momentum indicators, you know, it's just a representation of price. And, you know, it's something that you can see that's coming. And for example, so we saw the MACD on the weekly. So here, how we read this is that when it starts pinching and starts going to the bottom right, that's really bad. So we're expecting a lot of volatility coming. It's either going to go down or go up. It's just there's an explosive move coming when it pinches on the 8-hour, the 12-hour, the daily. Look at that pinch. It's either going to go down or go up, and I'm believing that the S&P 500 is coiling right now, and I think it's about to break down based upon credit spreads and the Japanese yen powering up. And I did get a forecast on Timing Solutions from the Yahoo data feed, and it says something like around December 26th as like where we would bottom. So in a lot of people are thinking it's going to be in January, and I don't know. I have yet to see in some kind of reasoning that it would happen that way, just because of just context of the post-year election year on the market rally, and then people really want to believe in the Santa rally, but when you take into I guess context the statistics with the Santa rally in a bear market, it doesn't hold up really well, because like a lot of the Timing Solutions cycles are diverged right now. The Q Spectrum 2 is looking at the Santa rally, and then the annual and the 4-year are looking at the Santa rally, but the decennial sees something different, to where we're on the downslope and we bottom in the 26th, the day after Christmas. So I'm choosing to believe that until market structure changes. And so the momentum here is really saying that, hey, this is a possibility that we're winding up to make this big explosive move, and we have yet to see where it's going to go. But for the most part, the price action looks weak on this H4 breaker to the upside. I mean, you would think it was a big move, but it wasn't. I mean, I'm still in first place, or roughly, with all these shorts. And if there was an explosive bullish move, I should be heading down to 35th place, right? Because the rest of the people are long for the most part. Very few people on Covey are short. So it makes you kind of wonder. And then throw in Jim Cramer in there, who's like super bullish about December, and then you kind of you decide, okay, yeah, maybe I shouldn't be so much bullish if Jim Cramer is bullish. But so that's kind of the best I got. If I were to say like places where it could reject is like maybe 8-hour resistance, which is this is a swing high. 8-hour resistance right there would put us there. It's the closest up candle close without it being a 4-hour candle. And this is the swing high. We've got to label it. And it's lagging pretty bad when I record. And then this is the 8-hour. I mean, it happens to be the supply zone of this up candle, and then 8-hour resistance right here. Or no, 4-hour resistance. But 4-hour supply is the 8-hour resistance. But I kind of see it just peeking its head above the weekly open, getting rejected off of 8-hour supply, and then reclaiming the weekly open to the downside, and then breaking down for a nice rising wedge in some way. That's kind of how I see it happening. And then a nice, really big elevator to the downside. Maybe it goes a lot quicker. Maybe this is the left shoulder. We hit weekly open, and then we get back underneath the previous week low, and then we nuke. Maybe it's a lot smaller and easier than that. So this is like, speculation, but we have no idea how it's going to play out. We just know right now we're into the breaker, and we have to see kind of a daily close to where it's more certain, where we flipped support, daily support, which is right here. We need to flip daily support. Once it's unquestionable, then we'll head lower. But this is a good sign for a possible reversal to the downside. It's just we happen to be in a nested breaker, which just creates a lot of havoc and volatility. So maybe that's kind of what I'll add to the trade journal on researcher experiments and how to be more picky. So I respected the 5-minute auto squeeze for the most part. I just kind of added some, like if I was in a squeeze, maybe I'll buy the lows and then sell the highs, kind of deal. But when it broke out, I just turned it on trend mode, and then so something that I thought would be interesting. So if it's separated from bands to go 1 micro, big stop loss, and slow break even. So I'll figure that out. So that's one option of an experiment I want to do. I also want to do some back testing on this week, just with the entry bot, just to see if I would have just had no influence and just let it run, if I would have been better off. That's something that's going to be an interesting experiment, and I'll record it as well and share those findings. And then we'll add that to the daily overview. We'll experiment findings video. All right, and then the next one was what was it? It was related to something we were discussing here. Oh my gosh, I'm just like drawing a blank. This is terrible. Okay, nested breakers. Whenever there's nested breakers, like H4, and like a nested breaker like this looks terrible. Whenever there's like nested breakers next to each other on the H4 or the weekly, to just have a smaller position size. I think that's just the best way to do it, to decrease possible loss. So nested breakers, H4 or weekly, decrease position sizing by half. I think that's a good rule of thumb. So then maybe we get closer to just our target, and I don't know, I think we'll feel less bad, if we lose less in all the chop, because that's kind of what the nested breakers are about. They just kind of bounce off each other, and it creates the chop. And we see that with the bands too. separated from the bow spans and middle channel. So I think that that'll help us in the experiment of live testing going forward. And then whenever we get to a high quality like support, daily support, weekly resistance, daily resistance, kind of nice setup of a reclaim or whatever, we could just go forward in doing a regular sizing. All right, so that's the S&P 500. Oh, there we go. And the daily closing thoughts on that. Now let's go into oil. So going into oil. Okay. We bounced off of weekly the support that flipped to resistance because this held for this candle, this down close held as support for this weekly candle and then broke, and then now it's retesting it. We are seeing a hard time of closing above this level on the daily, and we're waiting to see what happens, which way we go. I think it's kind of just in a no man's land, and it's ping-ponging, and it's going to go one way or the other. And if we start closing anything above here, which we set an alert, we would get out of our oil short. Just because it looks like it's a nice reclaim. That's what it would look like. It would look like a nice reclaim, and it wouldn't do well for us. So that's the main thing. If we break down, which we're expecting it will, then it would we would keep our position. I mean, we're keeping our position right now in the no man's land, but yeah, we're right at the yearly open, and that's what that blue line is. So it's kind of deciding whether to go down or up. I think that's what it's doing. It's trying to decide. Okay, and then looking at market structure point of view, we're on a bearish weekly breaker retest at the yearly open. We're hitting resistance around this Fibonacci support and resistance that was put in based on the weekly anchor points, and then we're kind of coiling here on the H4 between the previous day high and low. We had an inside day, and it's pretty much indecision. Inside bars are just indecision. It's just coiling, and it's just consolidating, looking for a direction, and it just hasn't found it yet. We just have lower high closes on the H4 and higher high closes on the down candles. And we're just kind of just coiling and coiling and coiling, ready to break to a direction, which I think is going to be down. But I don't know. Right now, institutions are positioned bullish, so we'll see. Anything goes. All right, so this is kind of where it gets interesting when we look at credit spreads, HYGH and LQDH. So when we look at HYGH, we've closed the week and broke out to the downside. We flipped that support to resistance, and it looks like we're going to want to go test all the way to weekly demand or support right here. It's just we also have this moving average channel support right here that's kind of helped these week lows in some way. But yeah, we're kind of in this like floating no man's land on the weekly, and on the daily, we're literally in the middle of all these moving averages. The 150 in the blue, the teal 72 moving average, and then the 24 moving average in red, all simple. And we're underneath the weekly open, and we dipped below, tapped the 72, and then closed back above this down candle close. So now it's acting as support. So where this is the no man's land until something breaks or what. we're really close to either going bullish or like going bearish. It's just in the middle. So, but you know where I stand. I'm waiting for it to break down. I mean, this weekly break is pretty significant to where it's a really good short, long-term wise to this weekly demand. And to me, this weekly time frame speaks to it going there to 80.62. Now, if we go on a market structure standpoint, this H4 is unreadable almost. But here on the weekly, we have a weekly market structure break that we've retested a couple times, but we've had lower weekly closes on the highs, on the up candles, and we broke down, and now it's just time to fill these gaps. So that's kind of just how I see that on this version. And now we go to LQDH, long-term corporate credit spreads, and we broke out. We almost we need to close the week to have a break in support, but we did break daily support with a gap, so we could come back and fill it. Who knows what that's going to do? But the next support, which is kind of what we tapped the 150, but the next support is 90.56, and right now we're in the middle, and it looks like it could get better, it could get worse. But in terms of like this weekly close, if we come down and we close the week underneath here, it's going to be bad news, and it's just more for the downside for LQDH, the credit corporate credit spreads. So it's like a slow-mo crash. It's like a crashing in slow motion. Now the currencies, looking at the euro. So the euro had a really strong weekly close, but it's falling apart. It's almost like it's putting in a deviation, a correction. So this was weekly resistance, and this close on the week made it weekly support. Now it's looking like it wants to close back under. This is the yearly open, of course, on this this blue line. And so basically everything is bouncing off of the yearly open, and it's trying to find a direction, and for some it's already decided, and it looks like the euro wants to go back in its range and flip this back to resistance. And on the daily, we have reclaimed this up candle high that acted as resistance for this candle and this candle, and we finally broke with this candle to the upside, but now it's reclaimed it, and we're going to see if we get lower and we reclaim this support level to resistance. But with the euro going down, it's not really good for helping the market stay up. The euro going up helps the U.S. market stay up. When the euro goes down, the U.S. market goes down. It's just kind of how it works. Just because I think Europe is a big trade partner, and if Europe has less purchasing power, they will not buy a whole lot of American goods, and that would hurt our GDP. I think that's kind of just how it works. That's my impression. Now, if we were to look on the market structure level, we broke an H4 market structure to the downside, and we're currently deep into a bullish breaker. And we did not close below it, but it is like a point of interest of what it's going to do next. But you know, we basically did a stop hunt on the previous day low, and we're pretty much doing an inside bar on the day. It's kind of like oh, this is a new bar. Never mind. But yeah, like we didn't close below, so I mean that would have been this bullish breaker would be gone if we did. But who knows? Right now we got resistance here, and we're going to see what happens next. Now moving on to the Japanese yen. So the Japanese yen has been in the news, and that's why. if we look at the weekly, this is really big. I've been watching with these weekly lines, and we've kind of been in here, but finally we have a huge explosion, and it's only Tuesday, so we got to see kind of where it ends up at the weekly close. But all of this could turn into support. I mean, we made it all the way up here. So that's kind of crazy, the amount of speed and distance we've traveled with the Japanese yen. And we kind of knew that this was going to be a big deal because the Japanese yen left so many gaps on the way down that it was only a matter of time. And this might be the time where the Japanese yen brings fragility to the markets, and it fills all these gaps. And on a daily closing basis, we closed the day above everything, and even above like things over here. I don't know if we're gonna come back and retest, but we definitely closed over a lot. I mean, we closed up over here. So the question is, like, how deep of a retest will this do? Will it just retest here and just keep going? And I almost think that's what's going to happen. We have to see how far deep down the Japanese yen goes, but this is a really big sign of fragility in the markets. The credit spreads are leaning to showing some cracks in the market and the underlying foundations of the market. And then the Japanese yen is showing one huge crack. So them combined is a really useful indication as to just kind of what kind of bias we should be having going forward, and just really looking for that in the institutions, just so that we can position ourselves ready for the downside. But I'm really excited about this Japanese yen on the weekly close, because it will tell us a lot about what's to come if it's coming this week. I mean, I guess for the most part, like if it's coming next week. All right, U.S. dollar. U.S. dollar's dropping. Not surprised. Like if you looked at the COVID nuke, the dollar dropped. Let's see, 2020. There it is. The dollar dropped on the COVID nuke. So the U.S. dollar is really good for when the world is, okay. But when the world is like fragile, it's not a good risk-off indicator. Japanese yen is the best risk-off indicator because it gets so cheap, and then everybody wants to start buying it because it's so cheap in comparison to everything else in terms of risk-off currency. And then another one would be like the Swiss franc as a risk-off currency, but in terms of when things are not they're not like super fragile, then that's when the Swiss franc is good because they have a lot of gold, a lot of precious metals. But it's not good that the dollar is suffering, because if the yen is gaining strength and the dollar is suffering, it's showing just how sick things are. All right, and then last but not least, we got the VIX. So we'll go through the VIX. So VIX, we closed the day back below. We were thinking we were going to hold this support here, but we didn't. But we held this support. So I mean, we got to just get rid of this. It's not like useful, but this resistance held, and now we're kind of just wondering what comes next. Is there fear in the market? Like, what's going to happen next? And I think it's just kind of too hard to tell. If anything, maybe we make equal lows here, and we make like a bulldog. So the bulldog is, let me turn off the magnet. This is the tail. This is 1 foot. It's a side profile. This is the back on the day. This is the front foot. And then this is the head, which is a pennant or a bull flag. And then that's pretty much, I guess, the entry. But that's the bulldog right there. Back foot, front foot, bullish engulfing, bull flag, and off we go. but it's not completely done yet. We can't really say that that's what it's going to make, but it could just do whatever the Japanese yen did, where it just spikes up. Now, if we were to look at this one, we could see here on Pepperstone that we did close the day below support here. So this flipped to resistance. So we're going to kind of wait and see if this is like a reclaim. If this becomes another swing failure pattern where the bears got it wrong and we go up. It's totally possible. We have to wait and see. But right now, we're just chopping. We're chopping pretty hard in just everything. Now we go to just the breakers. This is the regular VIX. I'm like, what the hell? What's going on here? Like, what's actually happening? It looks like, I don't know. There's a huge gap here. Breaker to the downside here, and almost resumption to the down. Like it's resuming out here. We'll see. We can look at the Pepperstone one here. It says it's just ranging, and this is what I prefer. It's just neutral. It's just ranging, no man's land right here, and we need it to close above here or below here to get a direction. But this is kind of where I think the market's at right now, is where it's in no man's land and it's coiling and it's getting ready to spring. And that's kind of just my point going forward. And just to be ready. I think, when I talked about timing solutions, we could be in the midst of it going down. This weekly MACD cross to the downside. Huge indication. That's assuming that we have no bullish pump to close us in the week, but we're coming into Wednesday and the time is ticking, and it was weak bullish price action today. We have no news, no bullish, nothing that's bullish that would push us in to better territory, better bullish candles, bullish engulfings. No real news. Like it would have to be black swans. Black swan good news. Okay, so then next videos to come, we'll do an outlook, macro outlook video. Still planning to do the Charles Schwab thematic portfolio. Most likely it's going to be on the weekend to break down the 25 stocks in the theme portfolio from Charles Schwab and refine it down to 10. And then we'll make a video on experimental findings with backtesting in NinjaTrader with the nested breakers. And oh no, it was mainly just this week. This week, the first experiment was going to be so this week, and we're going to experiment with if we were to just turn on the bot and just how it would do at all times, trend mode and then reversion mode, how each one would do versus like how I did. And then if we were to do the a version of the smallest position size we can do with a wide stop loss and a slow break even, how that would do. And I guess maybe we could make it like a 5-to-1, 10-to-1 take profit. So slow, micro, wide stop loss, slow break even comparison test. And then tomorrow's trade plan, we'll make a video on tomorrow's trade plan. So that's kind of what's coming up next.